Should investors take a shot on this name? Joining us now is Leerink Partners Senior Managing Director, Dr. Mani Foroohar. Dr. Mani, thanks for joining us.
A pleasure to join you.
You got accelerating an $18 price target, so I'm guessing that you don't understand why it's so high, but can you concede there, though, that there are a number of cancer readouts that are due later this year, and the stock might find some lift here?
Oh, it's 100% critical cancer story. This is a stock that has been a serial underperformer over the course of the last several years as the top line has declined on the vaccine revenue side. And the recovery we've seen has been driven by optimism that we're going to see real critical data on the pivotal trial for this cancer vaccine. And the excitement's not surprising to us. We saw positive data in this study several years ago. This 5-year follow-up follows positive 3-year data earlier. But one of the concerns that we have is the baseline characteristics in this study can be a little bit misleading. And baseline characteristics in a cancer study are a little bit like original sin in that they require tremendous amounts of luck to overcome. This is a study that was sharply biased in favor on terms of the baseline characteristics for the active arm. So we are less likely to extrapolate from this data to the oncology data. But that hope and recovery trade is a huge driver for stock that's been a multi-year dog. So we're not surprised to see a sharp rebound given the crowded short positioning into this one. And it's definitely been a sharp move and will be a lot of volatility throughout this year as we see the final pivotal data for this melanoma data set. Hopefully this year, though management has suggested it could slip into 27. So there's a little bit of uncertainty and volatility there as well.
Company made a bit of news today, the CEO saying that it will invest less or not much at all in late-stage vaccine trials in the U.S. For obvious reasons, because, of course, the government is recommending fewer of them. What does that mean in terms of the long-term growth path for the business?
We're fans of that decision, actually. Independent of our rating, we've been concerned about the shift away from vaccine use and vaccine recommendations with this administration and the last couple of administrations. And I think this represents the CEO recognizing and making a tough, smart decision. It does weigh on future growth prospects, especially for the combination COVID flu vaccine, a big part of the bull story. So I think this represents the CEO hedging his bets a little bit on the base business. It's a smart decision, even if it reflects an underlying negative headwind for their base revenue business. But Stefan Bancel is doing the best with the hand that he's been dealt in this case.
What will it take to get you to upgrade the stock, seeing how it's performed? I mean, your $18 target, we never really hit that. It went as low as about 22 or so, Mani. And so I'm wondering if you think it's time to change your rating at all, given, what you say is smart moves in terms of scaling back on vaccine R&D and the potential data points that we're going to see on cancer.
We've actually bounced around our rating a couple of times as the fundamental story has changed from the peak of the pandemic boom, the transition to the current endemic environment, and now the pivot towards the pipeline. And the key debates for us this year and for the market as a whole are going to be, to what extent is there existential risk from the IP dispute with Roivant and Arbutus? That'll be a key event that plays out in March one way or the other and represents potentially meaningful risk to the balance sheet as well as future margins. We're going to be watching that one closely, as well as what we see from this cancer readout. This will be hugely binary. There's a lot of optimism baked into the stock at this valuation. And to be quite honest, we missed this move on the way up. And now it becomes a tougher trade. If we were to get that melanoma data today, the risk reward isn't as clear as it would have been at $20 or in the teens. But those are key events that could change our view going forward and change how we think about the long-term cash flow generation of this business, which still depends mostly on the core vaccine business. So they're going to have to change that in a real way. One way or another, regardless of how our rating plays out, this is going to be an extremely volatile stock heading into key cancer conferences mid-year and the back half of this year.